Let's have a look at foreign currency, page 110 of the technical review book. Okay? All right. Now, people, this is a bit of an exception. I will say something now that I will rarely say. For almost all of the topics in financial accounting, I cover them like the one we just did, impairment of long-lived assets. I take ASPE or IFRS, I use that as the base, and then I bring in the other one as some differences. You just saw that. All right. We have a number of exceptions. Foreign currency is one exception. Revenue rec is another exception because of the wild section now for IFRS, which is very different than ASPE. And I think joint venture is another exception. For all three of those topics, I teach IFRS versus ASPE separately, or Michael does it. Okay? I don't know how to combine this because it's just too different. Although foreign currency is weird, because foreign currency has the same concepts. This is where it gets really strange, but I have to teach it separately. So I'm going to show you ASPE versus IFRS separately. Okay, this doesn't really matter, I don't think, anybody's life. Okay, no one's going to lose sleep over this and how we do it. I'm just explaining that there's a reason I'm doing it separately for ASPE and IFRS, because you'll see I can't combine it. There's just no way. I can't do what I just did for impairment. Most of the time we do. I think tonight, to be honest, yeah, it's probably going to be the only one we do that tonight. Okay, so let's do ASPE first. Why not? Doesn't really matter. Okay. Now, stop me again, people, if you have any questions. All right. We have three situations under ASPE. Number one, the transaction is carried on directly by the reporting enterprise. What does that mean? I have a Canadian company and they're buying or selling into the States. Let's use United States as our foreign country. Canadian company buying and selling into the US. No sub, no division, fine. They're supposed to use a method, the temporal method. How do they translate? So what do? Number one, when the transaction occurs, they translate everything on that day. Assets, liabilities, revenues, expenses, whatever the rate is on that day. Come the year end, at the balance sheet date, they take the monetary items, we'll define in a second, and the non-monetary items carried at fair value, and they translate it at the balance sheet date. Presumably, it's going to be a different, I don't know, it's probably going to be a different, rate, probably, assuming your exchange rate is moving. Okay. Now, people, what are monetary items? Monetary item, I don't know if anyone wants to give me a definition or give me an example. Give me an example of a monetary item. You need to know what monetary items are. Okay, good. The first one I got is cash. That is correct. Give me another example, please. Okay, good. A bunch of you are saying receivables. Okay, so people, look. Please do not think monetary means only cash. It does mean cash, but it means anything that is fixed in the amount. Receivables, payables, not investments. Not investments. Investments could fluctuate. I shouldn't say not investments. It depends what type of investment. So some of you said investment. People, it depends what type of investment. The amount has to be fixed. Inventory is not monetary. I don't know what the value of inventory is from day to day. If I sell it tomorrow, I sell it next week, I get a different amount. That's not monetary. But accounts receivable, I know how much I'm collecting. Accounts payable, I know how much I'm paying. That is monetary. So you got to, so it's easy. It's cash, receivables, payables, those are monetary. Non-monetary, carried at current value, fair value, you also translate at the year end. So non-monetary, I don't know, if you're carrying inventory at the fair value. So people, just so you understand, this is unusual. Everybody should realize that. That's unusual. We don't have very many non-monetary items we carry at fair value. I'm talking ASPE. Under ASPE, I'm using historical-based accounting. I record things at cost. What do I do at fair value? If you have to pick a handbook section where maybe there could be a non-monetary item at fair value, which handbook section would I pick? Excellent. Amit says, very good. Financial instruments, beautiful. Yeah, that is where you might have some non-monetary at fair value. You're not going to have many sections in the handbook where you're allowed to write fair value under ASPE. Okay, so all I'm saying is you're not going to have many non-monetary at fair value. Okay, all right, I have a question. Promissory note, would that not be classified under investment? Yeah, so, okay, one sec, that's why I said to you, that's why I said some investments you could be right. Some investments would be monetary, some could be non-monetary. I need more details on the investment. I need more details on the investment. If the investment is fluctuating in value, it's not going to be monetary. Okay, all right. The remaining non-monetary items at historical rate, which are like most of them, don't do anything. Don't do anything. You've already translated them. You've already translated them. Just leave them be. Don't do anything. All right. Where do the gains or losses go? Into the income. If you have any gains or losses. Now, people, why will I have gains or losses? Because look at number 1 and look at number 2. I first translate on Monday, February 15, when I engage in a transaction. I'm using an example. And then my year end is December. The exchange rate moved. And I've got some monetary items. Now I'm translating the monetary items by a different rate. I have a gain or a loss. Where does that go? Income. Okay. So this is situation number 1. Question. Is it only the assets and liabilities that are translated, or do you translate the expense and revenue? No, you translate everything. Look at number 1. You translate everything under number 1. But come the year end, you only translate again the monetary assets and liabilities and the non-monetary carried at fair value. You don't touch your revenues and expenses. You've already translated them once when they happened, when they occurred. Okay? All right. We're good. Number 2. I have 2 more situations. I now have a foreign operation. I have a sub. Okay. I have a sub, a division. I don't care. You got some entity sitting in the States. The question is it self-sustaining or is it integrated? Is it financially operationally independent? That's what self-sustaining means. Please know the definition here. I'm going to help you a little bit on the definition. Now, okay, look at the next page. I'll answer the question in a second. Look, this is where you get into case writing where, you might have to look at a few different facts. It's a bit of a subjective analysis. I'll tell you a couple things, okay? And by the way, I don't have this in your notes, these blue boxes. That's just my little thing. I have a few of these. You may have to go and you may have to look and, make maximum use of case facts. Okay, fine. Look, they should give you hints in the case. What you really want to see is you want to see how much is the Canadian operation involved. How much are they controlling? How much are they involved? Are they selling all the goods to the States, to their sub? Are they negotiating the financing for the sub? How much involved are they? So you're going to have to use your judgment because you have to figure out, you got to classify it either self-sustaining or integrated. Mohammed's asking, is number 1 for monthly statements, number 2 for year-end statements? I think you mean on the previous slide, you mean number 1. When you say monthly statements, okay, that's going to confuse everybody. Okay, number 1 simply means whenever the transaction happens, the day of the transaction. Of course, that goes into your monthly statement, yes. But it's the day of the transaction. And number 2, yes, that's the year end. That is your year end statement. That is correct. Okay? All right. So you got to classify it. Okay, fine. Now, how do I count? All right. Well, if it's self-sustaining, let's do that. You'd use a different method. Use a current method. Okay. Not the temporal method we used before. How do I do the current method? Well, all assets and liabilities translate the exchange rate at the balance sheet date. Okay? At the year end, translate everything. Revenues and expenses, translate them during the year, whenever they occur. And yes, you're allowed to use an average rate. An average rate. I don't have to use exactly every day. In other words, you understand what I mean by an average rate. Let's say I pay rent every month on the 31st, on the end of the month. Do I have to translate rent at the end of every month? No. I can wait till the end of the year. I can add up my rent, divide by 12, okay, whatever, and use the average rate. Okay, fine. You have a gain or a loss. Now, why would I have a gain or a loss? Oh, very simple. Because on the assets and liabilities, you first translate them. You have to translate them, of course, the day they occur, just like the other method. But then you're translating them again at the end of the year, all the assets, all the liabilities. I guess it could net out to 0. Probably won't. Where does the gain or loss go? Separate component of shareholders' equity. Okay. That is the self-sustaining, for a self-sustaining operation, the current rate method. Different method of translating, and the gain or loss does not go to the P&L. It goes to shareholders' equity. Fine. I don't have to teach this one. I've already done it. What happens if my operation, my sub in the States, is integrated? Okay, guess what? Use the same method as if you didn't have a sub, called the temporal method. We've already done it. Now, people, does everybody understand? I'll answer the question in a sec. Mohammed, does everybody understand why this makes a lot of theoretical sense? It should. Here's the question. Should there be an accounting difference? If I have a Canadian company and I'm buying and selling into the States, or no sub, or I have a Canadian company and I have an integrated sub, and I take my product, I ship it to New York, and then I sell it to the consumer. Should there be an accounting difference between those two situations? Is my question, and Mitra is saying, and other people are saying, the answer is no. Right? Why not? 3 words. You're correct. The answer is no. Why not? 3 words. No one's giving me my 3 words. In spirit, they're the same. Okay, good enough. Okay, that was 5 words. I like that. Okay, Amit, that's good. In spirit, they are the same. The 3 words I was going to use is substance over form. What's the substance? The substance is the Canadian company controls everything. So what the heck is the difference if I go and legally set up a sub? Who cares? In substance, it's the same. So the accounting people say it's the same method. So, people, what have we got? This ends ASPE. What do we got? I got 3 situations and 2 accounting methods, and that's the entire ASPE. What are my 3 situations? Number 1, Canadian company buying or selling direct. No sub. Use a temporal method. Number 2, integrated operation. I have a sub, but they're integrated. Same method. Temporal method. Number 3, I've got a, I have a sub that is what we call self-sustaining. And there I use a different method, the current method. That's it. 2 methods, 3 situations. So, that's ASPE. Any questions? Any questions? Now, people, here's the thing. What you need to know, okay, what you need to know in cases, you have to understand how to translate. You have to understand basically where the gain or losses go. You have to understand what type of a sub it is if you happen to have a sub, and that's it. Like those are the big issues in foreign currency. You have to understand now, and if they're doing something, is it right or is it wrong? So I have a few questions here I'll deal with in a sec, but I'll just give you an example where sometimes people get confused. If I look at an income statement and I see a gain or loss on foreign currency on the income statement, that tells me something. You know what it tells me? If we have a sub, it tells me they're using the temporal method. It's integrated. I don't know if that's right or wrong, but that's what they're doing. Otherwise, there'd be no gain or loss. And if I see a gain or loss sitting in shareholders' equity, that tells me we have a sub or division or something in another country, and it's self-sustaining. Okay? So typically on these cases, when foreign currency comes up, those are the type of issues you're dealing with. Either they did something wrong, or you have to explain how do you account, what type of an entity is it, how do you translate. Now, I just have a couple questions, and then we'll go to IFRS. Oh, God. Somebody wants to know, it applies to NPO. Oh, boy. Does it apply to NPO also? Okay, that's a complicated question. I don't believe, okay, I'll tell you why that's complicated. Number one, for NPO, it's part 3 of the handbook. In the part 3 of the handbook, I don't believe there's anything under foreign currency. I don't think so. So then you get into, okay, so if there's no NPO rule, what are you supposed to do for an NPO? So for an NPO, if there's no, oh God, what do you have to do now? I'm going to get this mixed up. If there's no rule in part 3 of the handbook, if I'm not right, then I think you flip into, I forget which one. It's either ASPE or IFRS. You follow ASPE or IFRS. I forget which one. Somebody here remembers, you can tell me for NPO. Okay, but yeah, I mean, it's not a good issue for NPO, to be honest with you, because you end up applying probably either ASPE or IFRS if it's an NPO. As far as I know, I don't think you have special rules for an NPO. Other question, do we translate a balance sheet date rate even if we have forward cover for AR or AP? Okay, so that is a good question. When you say forward cover, I think you mean forward contract. I got to remember that one also. These specific questions, what do you do for a forward contract? I think a forward contract sets the rate. So I think the answer is you're supposed to use the forward rate when you're dealing with an AR and an AP. I think the forward contract does make a difference. People, I'm not 100% certain. If in the break, if I have a chance, I will look that up. But there is a special thing. There is a special rule for if you have some type of forward contract and you have payables, you have receivables. Again, I'm trying to go through the basic, the general stuff. I don't have time to get into every detail here. These are good questions. But I'm just saying that, you know what I mean? Like, I'm not up on, like, I remember some of these details because, again, I'm trying to just make sure you guys know the basics for each section. But that is a good question. If I have a chance in the break, I'll look it up and make sure that what I just said was correct. Okay, that was ASPE. IFRS ends up being a totally different analysis, but the end result is the same. Look at under IFRS. 3 steps. Step number 1. You have to identify the functional currency for every parent and sub, every foreign operation. Now, maybe you don't have, I don't know, maybe you don't have a sub. Okay, fine, I don't care, then just do it for the parent. Okay, but I'm saying you have to identify the functional currency. What is the functional currency? Yeah, okay, fine, look at the nice second point, that's the definition. It's a currency in the primary economic environment. Yeah, okay, lovely. Nobody understands that. Nobody understands that, and along comes the handbook and gives you about 9 points to look at to figure that out. That's what I mean by nobody understands it. If everybody understood that, I wouldn't need the next slide. So, this is really important, And this is what you do if you get into IFRS for foreign currency. What you do is you first, step number one, you figure out the functional currency and you look at these factors. And here there's an order. Look at A, B, and C first. Look at A, B, and C first. I don't care, by the way, A, B, or C, which comes first. All three of these are called primary factors. I want to know the currency of your sales. I want to know the regulatory and competitive environment. By the way, that's usually A and B are usually the same. Usually. I want to know the salaries, materials. I want your expenses. Now, if all three, A, B, and C, are the same currency, you're done. It wins. That's a functional currency. But what if I got some sales in US dollars and I got some salaries in Canadian dollars? That's called mixed. If that's the case, you got to keep going. Next, look at D and E. What's your financing in, US or Canadian? What's your receipts from operating activities in, US or Canadian? And now, it doesn't really matter. You got to finish the analysis. You got to look at these additional, factors. Okay, you have to look at these additional factors. I don't know, F, G, H, and I. These are considered a little less important. So how nice is this for case writing? How nice is this? Like, we're going to sit there and we're going to have a whole game of trying. You know how many qualitative considerations they can. What the heck is this? You know how many qualitative considerations they can give you. Okay, how do I get? God, let me get rid of this. You know how many qualitative considerations they can give you here, and you can play with all these. So, people, this is a judgment call. You look at these factors. You don't have to memorize them. You can always, I guess, flip open the handbook. Okay, you'll have it on secure exam, and you can look at these. But this is what you do, step number one. You've got to figure out the functional currency for every entity. And you're looking at all of these, and at the end of the day, what are you doing? You come to a judgment call. I don't know, pick a winner. Pick a winner based on the amount, based on, which one has more. Okay? I mean, that you just have to use your judgment here. Okay? All right. Everyone good? Step number two. Now that I have a functional currency, all right, I don't care which one. Let's say Canadian dollar wins. Okay, step number two. Translate into the functional currency. You better go to Canadian dollars. That's the winner. How do I translate? Well, initially, just like before, translate the assets, liabilities, revenue, expenses when they occur. But then the end of the period, and this will look very familiar to you, at the end of the period, take the monetary items, please translate them again at the balance sheet rate. Take the non-monetary fair value. Please translate them again at the balance sheet rate. What about the non-monetary? Leave them. Don't do anything. And where do the exchange gains or losses go? They go to income. All right. People, what did I just describe? That is the temporal method under ASPE. Don't say the words temporal method if you're answering a question for IFRS. They don't use that terminology, but it's the same method. The beauty of this, you don't have to learn another method. It's the same method. Everybody should recognize step number two. It's the temporal method. Just don't call it that, please. So step number two, the Canadian dollar wins. Half my assets and liabilities were in Canadian dollars. Fine, I don't do anything with those. But I had something in US dollars. Good, translate it to Canadian. How do I translate it? The way you see it here? That is step number two. Questions? Step number three. Translate from the functional currency into the presentation currency. What the heck is a presentation currency? People, that is the currency you present the financial statements in. What currency are my financial statements, my balance sheet and income statement in? Now, This step is only relevant if the presentation currency is different than the functional currency. Okay? If it's the same, if my functional currency is Canadian dollars and my presentation currency is Canadian dollars, you're done. You're done. All right, now, does everybody agree with me? Please say yes, that it is up to the entity what presentation currency to choose. You realize that. This is not a rule in the handbook. I can present the financial statements in anything I want. I want to do Mexican pesos. I can do Mexican pesos because I got some Mexican bank and the bank is screaming at me to have financial statements in Mexican pesos. They win. Fine. The presentation currency is kind of at the client's discretion. So if it's different than the functional currency, please translate. Okay, please translate into the presentation currency. Okay, fine. Now, how do you do that? Well, here you go. Revenue and expenses, when they occur, translate them. Okay, fine. At the year end, please translate all the assets, all the liabilities, everything at the year end rate. And if you have a gain or loss, where does that go? Oh, look at that. Other comprehensive income, OCI. Does this sound familiar? Please say yes. Same thing as a current method under ASPE. Don't call it the current method. They don't use the term, but it's the same thing. So the beauty of foreign currency is that we only have two methods that we use for both ASPE and IFRS, but the analysis is different. People, if you're into IFRS in a case, the first thing you do is you start to figure out the functional currency. That's what you do. You figure out the functional currency of every entity. And then you have to know how to translate. Don't use the word temporal, don't use the word current rate method, but just know the rules. And the beauty is it's kind of the same rules as ASPE. Just don't use those terms. That's it. That's IFRS. I know where the gain or loss goes in all these cases. And by the way, why does the gain go to other comprehensive income? Okay, I should say this. Okay, that's different. Where did that gain or loss go under ASPE? Where did the gain or loss go under ASPE, under the current rate method? No, not income. Where did the gain or loss go? Under ASPE, under the current method. The gain or loss went to, right, shareholders' equity. Good, the gain or loss went to shareholders' equity. Why does it not go to other comprehensive income under ASPE? I said it was the same. How come it doesn't go to OCI? I thought it was the same. Thank you, Mohammed. Very good. People, you don't have OCI under ASPE, but you only have that under IFRS. Okay? That's the reason it's different. But in both cases, where's it not going? Income, P&L. Doesn't go to P&L. Okay, it goes to OCI because you have OCI for IFRS. All right. So, kind of as I said before, people, that kind of wraps up the foreign currency, okay, the foreign currency section. It was kind of like what I said before. Mainly what you're doing is you're figuring out what the situation is. You're figuring out which method should I be using. It's a bit of a different roadmap for IFRS or ASPE. You know how to translate the different assets, the different liabilities. You know where the gain or losses go. Those are the key things in foreign currency. Obviously, again, you have a few other things. You can look at the handbook or whatever. I'm trying to really get you into the main things in the section. All right, questions? Any questions? I'm just giving a second in case anyone has, if anyone's writing anything. All right. So people, that wraps up foreign currency. I hope everybody who was watching the video, okay, found foreign currency useful.